In 2019, one company achieved the single most successful stock market debut of the decade. It wasn't a software giant or a biotech firm. It was a company that made burgers from peas. At its peak, Beyond Meat was valued at over $14 billion, a titan of a new food revolution, backed by billionaires and destined to change our plates forever. Today, that valuation has crumbled by over 95%. This is the story of a dream to build a $10 billion food empire, and a detailed forensic analysis of exactly how that dream fell apart. The dream began with one man, Ethan Brown. In the early 2000s, Brown became convinced that the world's reliance on animal agriculture was a ticking time bomb for the climate, human health, and animal welfare. But he wasn't an activist who preached sacrifice. He was a pragmatist. He believed the only way to solve the problem was to create a product that was a perfect, seamless replacement for meat. He founded Beyond Meat in 2009 with this singular, audacious goal. For years, the company operated in relative obscurity, pouring millions into research and development. The challenge was immense: how to replicate the complex texture, the sizzle, the aroma, and most importantly, the taste of beef, using only plants like pea protein, coconut oil, and beet juice for color. The breakthrough moment came in 2016. In a stroke of marketing genius, Beyond Meat convinced Whole Foods to sell its Beyond Burger not in the vegan section, but right in the middle of the meat aisle, shoulder to shoulder with real ground beef. This single move shifted the entire narrative. This wasn't just a veggie burger, it was a legitimate contender for the carnivore's dollar. The hype machine ignited. High-profile investors like Bill Gates and Leonardo DiCaprio boarded the train, lending immense credibility to the mission. The story was perfect: a noble cause powered by cutting-edge food science, poised to disrupt a trillion-dollar global industry. The dream was no longer a fantasy. It was becoming an investment thesis. And in May of 2019, that thesis exploded onto Wall Street. The Beyond Meat IPO was the stuff of legend. Priced at $25 a share, the stock opened for trading and immediately rocketed upward, closing its first day at over $65. It was a staggering 163% increase, the best performing IPO since the year 2000. But that was just the beginning. Over the next few months, a speculative frenzy pushed the stock to an astronomical peak of $234 per share. At that moment, Beyond Meat had a market capitalization of over $14 billion. This small, unprofitable food startup was worth more than industry giants like Macy's or Harley-Davidson. The $10 billion dream wasn't just realized, it was surpassed. This was the absolute zenith. But even at the peak, omens of the collapse were beginning to appear. While Wall Street was euphoric, grocery shoppers were doing the math. The Beyond Burger was expensive, often costing nearly double the price of the real ground beef sitting next to it. Competition was also heating up. Impossible Foods, with its own science-backed approach using a magic ingredient called heme, was winning taste tests and capturing the hearts of chefs. And quiet murmurs from everyday consumers began to surface online. The taste was good for a veggie burger. The texture was close, but not quite there. Dream was built on the idea of a perfect substitute, but the product was merely a good alternative. The critical failure of Beyond Meat wasn't a single event, but a slow, grinding collision with the wall of mainstream consumer reality. The dream crumbled under the weight of three fundamental problems. First, the price problem. For early adopters and climate-conscious millionaires, paying a premium was a small price for a guilt-free burger. But for the average family trying to manage a weekly grocery budget, especially as inflation began to bite in the following years, price parity wasn't a feature, it was a requirement. Beyond Meat never achieved it, and consistently lost the battle in the shopping cart. Second, the product problem. The burger was a scientific marvel, but it wasn't a flawless replica. For many, the taste and texture weren't compelling enough to make a permanent switch. More critically, as consumers looked closer, they saw a long, complex list of ingredients. This wasn't a simple plant. It was a highly processed food product, which led directly to the third crack in the foundation: the perception problem. The company's initial health halo began to tarnish. Consumers who were seeking cleaner, more natural foods looked at the sodium content and the processed nature of the patties and began to question if this was truly a healthier option than simple, natural ground beef. The dream of a guilt-free product was being questioned from all sides. It was expensive, it wasn't a perfect taste replacement, and it might not even be that much healthier. The fallout was slow, then brutally fast. The stock began a relentless, punishing decline from its 2019 peak. The company's strategy for growth relied on major partnerships with fast food giants. But these deals, once hailed as game changers, began to fizzle out. McDonald's tested the McPlant burger featuring a Beyond Patty, but after an initial trial, it was quietly discontinued in the U.S. Hopes for nationwide deals with Yum! Brands for KFC, Pizza Hut, and Taco Bell never materialized into the permanent menu items investors were banking on. The financial numbers told the story of the crumbling dream. Revenue growth stalled, then reversed. In 2022, sales fell by nearly 10%. By 2023, they were in free fall. The company was bleeding money, posting a net loss of $366 million in 2021 and another $338 million in 2022. The path to profitability seemed to disappear entirely. The $14 billion titan of the food revolution was now a struggling company. Forced into layoffs and desperate strategy shifts, its stock trading at a tiny fraction of its former glory. The dream had crumbled into dust. The rise and fall of Beyond Meat offers a masterclass in business reality, with powerful lessons for any innovator. First and most crucial, a noble mission does not guarantee a market. Ethan Brown's goal to improve the planet was admirable and inspiring. But most consumers make purchasing decisions based on three simple factors: taste, price, and convenience. Beyond Meat struggled on all three fronts, and its noble mission couldn't bridge the gap. Second, in the food industry, price is not a suggestion, it's a law. For a product to move from a niche market to mass adoption, it must be competitive. The green premium is a real phenomenon, but it applies to a very small segment of the population. Without achieving price parity, the dream was always capped. And finally, beware the Wall Street hype cycle. The IPO's explosive success was both a blessing and a curse. It gave the company a massive war chest, but it also created stratospheric expectations that no young company could realistically meet. The higher the rocket goes, the more devastating the crash back to Earth. Beyond Meat's story isn't over, but its $10 billion dream is. It serves as a stark reminder that changing the world is incredibly hard, but changing what people have for dinner is even harder. If you found this case file valuable, please hit the like button and subscribe for more deep dives. Now, we want to hear from you. Comment below. Have you tried Beyond Meat or Impossible Foods? And what did you think? We're looking for your honest take. See you in the next file.